Alright everyone, Cowboy Trades here, welcome back to the channel for another update on Bitcoin. So in this episode I wanted to discuss what I think is going to be happening in the markets for the next 5 days or so for the rest of this week. I am going to be away from this channel until Saturday. I've got plans to go to London tomorrow to fight in a Kendo dojo, and then for the rest of the week I'm going to be staying in London. I get back on Friday, I've got dinner plans, and then I'll be back with you on Saturday. So I thought what better time than now to update you on what I think is going to be happening for the markets for the rest of the week while I'm going to be away from the channel. So before we do dive into this content, please excuse my voice. I do have a little bit of a cold right now, so bear with me while I do jump through this analysis. So let's start off on the higher time frames. Now, if you have watched my past couple of videos, 3 days ago we talked about $11,000 Bitcoin based on the rejection from the CME futures. We also talked about the brutal rejection from the liquidity grab that we quite recently had, and about 4 days ago, 5 days ago, we were talking about how the effects of the interest rates and this traumatizing economic data was going to lead us into the rest of the week. And you can see these videos were basically almost at the top of the range. It was about 4 or 5 days ago that we made these, and you can see we're down about 7.5%, and 10% from the top of the range since these videos. So Bitcoin's price is definitely swinging to the downside. Let's, however, start off on the higher time frames and just give you a quick recap on this. So in one of these videos, we talked about the fact that we were currently residing in the 7786 Fibonacci right here. What you can also see is this range over here where we've got wicks, we've got candle body closes, wicks and wicks. And if I pull this range out, you can see the bottom of this range beautifully lines up with that lower bound 786 Fibonacci at 17,250. And where did price action push up to? Pushed right into these EMA ribbons, and now we are starting to plummet to the downside. We also talked about, of course, these CME futures and how we've already filled the CME gap free. We filled this quite a while ago, but we came back up to this CME gap at 18,420 on the Chicago Mercantile Exchange futures, 18,420, and since then we've been moving to the downside. And you can see this pattern has played out for a while. We had this CME gap form at 33,000. What did we do? Back tested it, came back up, boom, we filled it, and after we filled it, we broke down, and then we came and retested as resistance before breaking down to a new CME gap. And then what did we do? We broke up to the upper bound CME gap, 24,600. Then we broke down, filled this CME gap. What did we do after we fell beneath this? Well, literally a week ago, a couple of days ago, like we said, we pushed up to CME gap 3, retested it as resistance, and it seems like these scenarios are playing out once again. So in the higher time frames, it definitely looks like Bitcoin is getting ready to rush to the downside. We've talked about a couple of price targets. Obviously, in the immediate short term, I don't think we're going down to 11,000. That is one of my bear market price targets. I do think we go down to 11,000 and 10,000. However, in the immediate short term, I do see us coming down to 14,200. If you've watched my previous videos, you know that I've mentioned this price target a few times, and we're still about another 13.5% away from this range. However, I do have a price target in mind for this week, why I'm going to be from the markets, and it's not quite down here at 14,000. I'll let you know more about that in a second. Now, while we are wrapping up on the higher time frames, let's check out the oscillators. Our higher time frame oscillators that we like to use are the squeeze momentum indicator and the money flow index. I'm not a big fan of using the stochastic. I like to use this on the daily because this doesn't work too well in bull or bear markets. You can see quite recently when this fired a bottom, fired round about the 23rd of May. And if we look at where the price action was, we were all the way up at about 33,000 before plummeting to the downside. So stochastic RSI doesn't have the best track record on the higher time frames, which is why I use it for the daily time frames to look at, these lower time frame daily swings, 4-hour swings, to, capitalize on these lower time frame bounces. On the higher time frames, it's pretty much useless. However, higher time frames, what is useful? Squeeze momentum indicator. You can see that this is ticking into light red, and basically for the past month or two, pardon me, we've basically been at neutral. We've been at neutral since the price was at 21,250. We broke to the downside, and we've more or less just been lollygagging in neutral territory. And you can really see, if I do move up this this price chart a little bit, the last time we started a huge bearish wave on the squeeze momentum indicator was when price action was at 34,000. The time before that, the price swinged over bearish right here on the 3rd of January, and the price was around about 47,000 before swinging down to 33,000 approximately. So squeeze momentum indicator ticking into light red after we've been residing in this neutral territory. reminds me of an elongated version of what happened over here, and that is definitely not a good thing for the price action. We're basically at neutral right now. I mean, you can see if I zoom out, there's been huge swings in volatility on the squeeze momentum indicator. And right now, we've got a lot of room to rush to the downside, if that is in the books for Bitcoin, which of course I do think it is. Now, in terms of relative strength conditions encompassing the volume in that, we look at the money flow index. And when we are looking at these volume overextensions, you can see volume overextension over here, boom, volume overextension here, boom. We formed a trend line, and we quite recently came up to this on the 5th of December. We talked about this when we were around about here, 17,000, 18,000 or so. And as you can see, price is starting to move to the downside. The money flow index right now on the weekly is currently at 56.71. However, do bear in mind, we're in a bear market, and when we are looking at this volume overextension downtrend, we're basically at the mean price, which means we're pretty overextended right now. And we definitely, in my opinion, have a long way to go to the downside. You can see when we formed this trend line, we broke down and made new lows on the MFI down here at 31. We then made lower lows on the trend line before pushing into lower lows down here at 15.6. We didn't quite make it up to the trend line on this bounce over here, but once we did come back to this trend line, it would make sense for us to come back down and make lower lows. And I do quite believe that, you know, this MFI downtrend might be one of the final downtrends that we do have before the bear market is over. That does not mean that I'm saying that the bear market is quite yet done. If you've been watching my videos, I did backpedal on what I said about the Q1 2023 bottom. I now believe that we bottom in Q2 or Q3, and I'm leaning more towards Q3 because of stock market conditions, liquidity conditions, Fed interest rates. If you watch the channel, you'll know all of these stock market indicators that we look at. And of course, you know, we don't base all of our Bitcoin analysis on just what's happening in Bitcoin. It's very important to look at what's happening in the greater markets, because looking at things like the S&P 500 2008 fractal, looking at the iShares TIP ETF following the QQQ, these are all metrics that we use to call for these new lows in November. And most of the time when we were calling for new Bitcoin lows, it was based on stock market charts, not Bitcoin charts. But when we're looking at the stock market, which I will try and give a brief update on later today, and also when we're looking at Bitcoin, we are really getting ready to shift to the downside. Multiple liquidity grab fails. Well, not liquidity grab fails, because we did come up and grab liquidity, but we had a failed rejection, failed move up to the CME futures, and we retested that as resistance, of course. And then when we look over here, we came into that little liquidity pocket. We came up to that 786 Fibonacci area. We came up to this previous 2018 high, retested it, and now we are starting to move to the downside. So that is the higher time frames. If we do come over to the daily time frame, you can see this was a big old liquidity area down to about 18,600. Price was very weak. We managed to come up to about 18,400 and didn't quite grab the majority of the liquidity in this move. But as we've been talking about, liquidity conditions are quite overextended right now, and it's looking like all of the markets really want to move much lower. There's a couple of ways you can draw this. You can argue, hey, this is a bear flag, this is definitely valid. The only reason I haven't focused on this one too much is because it's only got 2 touch points, and I like the way that this bearish pennant has resistance, 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 resistance. You poke your head above it, retest, failed move equals a fast move in the opposite direction, and we are now back in this bearish pennant. Just like we had a failed move equals a fast move in the opposite direction here, we tried to break through the trend line, and boom, fast move back up to the upside. As we've broken out to the upside of this bearish pennant, this was a failed move, grabbing liquidity, coming up to that 786 Fibonacci, coming up to the CME futures that we talked about. Obviously the daily time frame, this liquidity grab correlates to a lot of these price targets that we've mentioned in the higher time frames anyway, but we're back in this bearish pennant, and I do believe that we are going to break to the downside. You can see if we do extrapolate this bear flag, bearish pennant pole to the downside, that this could equate to about a $11,700 Bitcoin, which is very close to our $11,150 CME gap to the downside. So there's a lot of confluence starting at 14,000. There's volume profiles coming in at 12,500. There's CME gaps down at 11,100, and of course, you know, this new bear flag price target, which I do think is another macro target that we do need to keep our eyes on, 11,700, sorry. Like I said, bit under the weather right now, but I'm just doing my best. Squeeze momentum indicator. Let's come over to the daily time frame and look at how these oscillators are looking. Now, on the daily time frame, it is not looking good. You can see that the squeeze momentum indicator is just starting a new bearish move. The last time we ticked over into light red, we were right here at 20,600 before rocketing down to 15,500 and making new lows. Now, at this moment in time, the bearish move has only just started for the squeeze momentum indicator, and it is saying, hey, there is a very, very good chance that we have a lot further to move to the downside. If we're also looking at the MFI down here, you can see that the MFI has ran into a mean trend line and it's now broke beneath the heart line. It looks like a kind of Bart pattern over on the MFI. Either way, we're at 41 right now, and I do see us probably coming down to about 15 or so in the next week as volume bleeds out of these markets. Now, of course, there is an oscillator that is in disagreement with this, and I do like to look at the stock RSI on the daily time frame a lot. This is one of the reasons why I'm not shorting in the immediate short term, because it is very possible that if we do break down to the bottom of this bear flag while I'm gone for the next week, 16,000, 16,200, I say a lot, this is the only oscillator, but it is saying there is a possibility that we have a short-lived bounce, maybe up to 16,800 or so, but nonetheless, I do quite like the stochastic RSI. So if we are looking at, all of these oscillators in general, they are definitely leaning more towards the bearish side, but I did just want to give you a quick update on this. Stochastic is pretty low right now after this nasty swing. Now, a lot of the time, this can reset very quickly without an actual big move to the upside. Like you can see here, this was a relatively short move to the upside, and this was a relatively short move to the upside before coming down and making lower lows. So just be a little bit careful if you are trading Bitcoin right now. I'm personally not in a Bitcoin trade. If you have been watching the channel, you'll know that the only thing I'm trading at this moment in time is KDA, and I will try and get an update on how that trade is going in just a little bit. Now, there's really not too much to update in terms of the price action. Like I said, if you've watched my past couple of videos, we've made quite a lot of extensive analysis, especially in this video here, Bitcoin's next move, where we did a 22-minute segment, and we also talked about, of course, what Bitcoin's next move is and my $14,000 price target, which, since we have posted this video, we are starting to come down to. Let's give a quick update on the OnChainMetrics. I'm going to zoom through these. I'm assuming all of you, or a lot of you, are veterans now, so I won't need to explain these charts anymore. So addresses with less than 1 Bitcoin, the retail wallets. As we know, these guys have done a terrible job of accumulating in the market. They started buying at 40,000 and they weren't interested in buying when the price was cheap. Now, retail is currently running in the markets and buying. Since I've been gone, for the past, when was the last time I did a on-chain update? It was at least 3 or 4 days ago that we looked at on-chain. But since I've been gone, once again, retail is drastically accumulating. Who are they buying coins from? They're buying coins from the guys that sold at 46,500. And if we zoom in, you can see institutional interest is still very dampened and diminished at this moment in time. And when we zoom out, it's pretty much done nothing but stagnate and go to the downside. So when we compare these two charts together, the Bitcoin ratio of retail to institutional addresses, blue line goes up, doesn't look good for the price action. As we know, the most recent bull run was very institutional led. I mean, we had your Michael Saylors, your Teslas, your BlackRocks, your Moonrocks, a lot of these large firms, companies coming out and putting Bitcoin on their balance sheet. And this is when we saw this blue line, the retail to institutional ratio, go to the downside as institutional interest led the market. Now, since 46,500, the institutions haven't been here. They've been selling, they've been sitting on the sidelines, and obviously they didn't sell at 69,000, but they sold at 46,500, and price is now down at 16,500. So, of course, just wanted to give you a quick update on the OnChainMetrics. If you've been watching the channel, then I'm sure you've kept up to date with this, but not looking good at this moment in time. There is also an OnChain metric which is leaning slightly bullish right now. Well, not leaning slightly bullish, it is leaning bullish. This is the Bitcoin balances on exchanges. Now, since we last updated this, there was tons of Bitcoin being flown into exchanges, and I think now, because there's quite a lot of FUD going on with Binance right now, and I do think Binance is fine. I have said this many times on my channel. I do not trust a single exchange with my spot crypto. And while I do think Binance is here to stay, would I trust them with my spot Bitcoin? No, I wouldn't trust anyone with my spot Bitcoin. I always recommend on this channel, go out and get a hardware wallet, go get a Ledger, go get a Trezor, get whatever you want, but just make sure that you're the one in control of your own keys. If you have been watching, Voyager, Celsius, FTX go bankrupt, and you're still keeping your cryptocurrencies on exchanges, slap yourself in the face, because you are really making a mistake. Get your cryptocurrencies out of exchanges right now. I personally have a small amount of capital in, Binance, KuCoin, a few other exchanges, but these are small amounts of capital, and also on Femex, required for me to make, one trade here, one trade there. My long-term holds are always in hardware wallets. Do not trust a single exchange with your crypto. So right now, a lot of the balances from exchanges are really rushing to the downside, and most of the outflows have been from Binance. I mean, if we look at the past 7-day change, 78,000 Bitcoin has been removed from their exchange. Now, in the past 24 hours, yes, they've got some deposits, but in the past 7 days, there's been huge withdrawals, literally from Binance. I mean, look at the other exchanges. This one's got 2,000 worth of withdrawals. Nothing even comes close to the withdrawals that are happening in Binance. And once again, I do believe Binance is probably the safest exchange out there, but I do not recommend that anyone keeps any spot capital in any exchange. So at this moment in time, I do think a large amount of this is attributed to the Binance FUD. People are withdrawing their coins, which is obviously a bullish sign. However, with all the FUD around Binance, it's kind of a double-edged sword, whether you want to call this a bullish or bearish indicator. It definitely leans more bullish, in my opinion, though. Now, in terms of other on-chain metrics, Bitcoin mining revenue on the monthly is absolutely falling through the floorboards. And we've been talking about this quite recently on the channel. We've been talking about the miner capitulations, hash ribbons. We've been talking about exchanges going bust. No matter where you're looking at, I mean, unless you're in somewhere like Texas, Africa, El Salvador, and you're getting really cheap energy, it's just not, because it's not profitable to mine Bitcoin at this moment in time. And we're seeing this with the hash ribbons indicator. There is a capitulation going on at this moment in time while the hash ribbons do flip to the downside. And once again, if you have been watching the channel, we've been looking at a lot of exchanges that are going bust at this moment in time. And in the past couple of weeks or so, we're seeing Bitcoin miner Core Scientific has lost 1.7 billion this year. Now, this firm is the largest US publicly traded Bitcoin mining company in terms of computing power. So if these guys become insolvent and they have to sell their mining equipment, hash rate is going to absolutely fall through the floorboards. And we looked at previous capitulations on the hash ribbons indicator, and when these mass exoduses happen, when the hash rate goes to the downside, miners sell their equipment, miners turn off their equipment. Yes, you do have a nasty capitulation ensue, but this normally does correlate to the bottom. So you can see massive exodus for miners down here. This marked the bottom. Massive exodus for miners here. This marked a macro bottom before pushing up to 69,000. And once again, this isn't a huge capitulation at this moment in time. It is definitely sizable compared to a lot of other moves that we've had. But at this moment in time, hash ribbons indicator is turning down. Bitcoin mining profitability is heading down. Hash rate is kind of at elevated levels, which is interesting because the hash ribbons indicator is turning down. So all in all, Bitcoin mining revenue, Bitcoin mining profitability, Bitcoin is going down, and your Bitcoin miners, these big firms that mine Bitcoin, they are starting to become heavily unprofitable, which is not a good sign in the lower time frame. So with all of this data that we've looked at, where do I think Bitcoin is going to be moving in the next 5 days or so while I am going to be away from the channel? Well, there's a very specific price target that I do have in mind at this moment in time, and this is also going to encompass, what is happening on the daily time frame. When we looked at the stochastic RSI, we talked about, hey, we could definitely expect a little bounce at some point in time. I really don't expect a huge bounce. I wouldn't recommend that you long a bounce. Of course, I really think this is going to be a really small move, but I do think we break down to the downside first. So where do I think we head down to? I think we're heading down to the 1.236 for Fibonacci. This is a macro target that we were talking about since about August, and as you can see, this beautifully came down, back tested, grabbed liquidity, and now I think we're heading right back down to this price target. So I still do believe Bitcoin has a little bit of a way to go before we can expect a baby bounce. I expect us to break down about 4.65% to the downside to about 15,700, and at that point it is possible for the stochastic RSI to have a small bounce, potentially up to the top of this range before we broke above it, retested it, and boomed up and grabbed liquidity. So all in all, I see Bitcoin in the next 5 days breaking down to 15,700. A small bounce could soon ensue, but I wouldn't be counting on it. I wouldn't be longing it. As you know, I am bearish at this moment in time, and if we do not hold 15,780, it's very likely that we rocket all the way down to this trend line and solidify another touch point round about 15,000, and then, you know, this could be another nasty indicator where we could see us coming down to 15,000. Stochastic would want a little bit of a bounce at this moment in time. MFI might want a little bit of a bounce at this moment in time. Squeeze momentum indicator might just want to lollygag for a bit on the daily and the weekly, and we could see a small bounce like this before heading down to the macro price targets that I've been mentioning on the channel for a very, very long time now, and that is this 14,000 zone right here, all the way down to 12,000. Also, of course, if we are drawing our VPVRs, which I won't do for now, we've, you know, done it many times, there's tons of volume clusters around this level. I mean, you can really visualize it. Look at how much data we had traded around this range. So it makes sense for me in the immediate short term, in the next week, for us to come down to 15,800. After that happens, if we do not hold this level, I see us breaking down to 15,000. We could then have a very, very small bounce, potentially retest something like the 1.236 before breaking down to 14,000. But however, this is kind of a no trade zone for me at this moment in time. The analysis that I'm doing on Bitcoin, we're not in a position of strength, so I wouldn't be shorting. We're not in a position of strength to long either. We're definitely not in a position to long. But what I would be saying is a lot of the analysis that I'm doing on Bitcoin right now is to really help me and help you understand where I believe the markets are moving in the higher time frames. And of course, if you've been watching the channel, you know my DCA plan. I do expect price action to go down to 15, 14, 13, 12, 11, 10. Whether we break below 10, I'm not 100% sure at this moment in time. I do believe 10,000 is a very, very strong support. So, as you know, if you've been watching the channel, I may be bearish, but I'm buying at, well, I've already bought at 17, I've already bought at 16, I'm going to be buying at 15, I'm going to be buying at 14, I'm going to be buying at 13, 12, 11, 10. I've already started buying, so either way, this is a win-win situation for me at this moment in time. And also, total altcoin market cap is not looking good whatsoever. This is looking a lot worse than the total. So I do expect altcoins are really getting ready to nuke to the downside. You can see this nasty distribution accumulation range over here, and if we do look right now, this red box correlates to basically no man's land. As we talk about on this channel, these areas where you find VPVR support, where there's tons of previous data traded, this is where you lollygag. And when you do break beneath these volume clusters and you run into an area where there is not much liquidity traded, you can see price action can very, very quickly rush to the downside. And since our last video, we have started to move down a little bit. I do expect the total cryptocurrency market cap, or sorry, the total 2, which is the altcoin market cap, to break down about another 10% in the next week or so. And if we do lose this 786 Fibonacci, this is where I believe the final capitulation is happening. If the total altcoin market cap, rather not the total cryptocurrency market cap, breaks beneath 400 billion, we are absolutely boned. If you look at previous cycles when this has happened, you know, draw your fibs from low to high, you can see, yes, I mean, this bear market was very, very nasty, but when did things really hit the fan? They hit the fan once we broke beneath the 786 Fibonacci. We broke beneath it, back tested it, and then we started nuking to the downside. And this picture is a lot clearer if we're looking at the total cryptocurrency market cap. You can see, you know, this was a nasty bearish market sentiment, bearish accumulation range. Like I said, apologize, I am a bit sick right now, but this 786 Fibonacci, once you did lose this is when momentum really started shifting to the downside. And of course, this also correlates on the volume profiles to an area where there was not much data traded beneath the floorboard. So this is really what I think is going on for the total cryptocurrency market cap. Like I said, I'm going to be away for the next 5 days or so. So if you did want a couple of updates, if I do see anything major playing out over on the charts, if I do see any on-chain metrics, any chart patterns for Bitcoin and the rest of the markets, I will post it over on my Twitter. So if you do want to come and follow me over here for some extra information, extra memes, extra economic data, anything that comes out in the next week while I'm away from my PC, be sure to head over to my Twitter at 618_cowboy. Also, if you haven't already, make sure to come over and join the Discord. If you click on my channel, click on the About section, you can see my Twitter, Discord, Instagram, and official merch are linked down below. So all I've got for you for this video, my friends. As always, if you do enjoy the content, make sure to let me know down below by smashing that like button, leave a comment down below, share the videos with your friends. It's been your boy Cowboy Trades. I'm out.